Hola, ¿cómo estás, amigo? This is part 1 of the basics of the standard. I plan to have 2 parts, but this is part 1. I don't know what accent that is, but let's get into it. Alright, let me make a quick disclaimer for the start of this video. If you're already in Forex trading, if you've been doing it for a bit of time, maybe, I don't know, 2 months, I don't know, even a week, bro, you might want to brush past the basics because it is literally the fundamentals. You need to know. If you're already in it, I'm assuming you already know, but I'm obviously doing this shit as if you're complete nobody, a complete beginner. So if you're a beginner, stay. You need to know this shit. This is like bread and butter. It's the basics of Forex before you can even step into the charts. But if you're a more experienced, you may want to just watch it just to double check you understand, refresh your memory. But I'm just letting you know ahead of time. So let me quickly let me tell you the topics I'm planning to discuss in this video. If you're a beginner, you might want to watch this down, write this down, sorry. So I plan to talk about in part 1, where the fuck is it? Alright, I'm talking about what Forex is, talking about the advantages of it, what pairs are, and the different types of sessions. In part 2, I'm going to do pips, spreads, order types, trading styles, and I might talk about time frames. So based on that, decipher whether you want to stay or maybe just skip to the next video. But yeah, if you're a beginner, stay. We're going to start now, bro. So let's get into what Forex is. Forex, aka FX, aka the foreign exchange market, aka currency market, aka the FX market, Forex market. It goes hand to hand. There's so many words for it, all the same thing. What it is basically is a global currency market where pairs are traded. You have 2 options when it comes to trading. You can either buy or you can either sell. Let me give you an example of buying. So you have pairs. You have one part of the pair which consists of one currency, aka the Great British Pound. The other part of the currency, or the pair, sorry, consists of another currency, aka the US dollar. If I'm buying this shit, I'm betting, oh, this shit is dumping, bro, what the hell? I'm betting that the Great British Pound is getting stronger against the US dollar. If I'm selling this shit, I'm betting on that the Great British Pound is getting weaker against the US dollar. And this goes hand to hand for exchange rates. I mean, we are trading exchange rates basically. If I basically, where is it? No, not here. If I type in what the GBP USD exchange rate is, £1 equates to $1.35. So if we go back here, where is my trading shit? What this means is that for every pound I buy, if I'm buying, I'm assuming that the pound strengthens against whatever that the US dollar is right now, so $1.35. And then if I'm selling, I'm assuming that the GBP gets weaker against the US dollar. So if I'm buying, I'm assuming that this number on the right hand side increases, which is the US dollar. If I'm selling, I'm assuming it decreases. Alright, we're going to talk about pairs more, but that's just basic. Also, if I haven't told you already, you need to be writing this shit down because this is important. You need to know this shit on the back of your hand, in your mind, bro. Anyways, let's talk about advantages of Forex exchange. One is it's the most liquid market in the world. I'm not going to get into statistics, but it just means there's so much money being pumped into this shit. There's hella people doing this shit. So it's so enticing or in, yeah, enticing, yeah. Number 2, it's open 24/5. What this means is it's so flexible, bro. So it's, I don't know about other times, but just equate this for your time. I live in London. The Forex market closes at Friday 10 p.m, opens Sunday 10 p.m, meaning you're trading Monday, Tuesday, Wednesday, Thursday, Friday, 5 days a week, 24/7, open within them days. I'm obviously trading set times, London Open, New York Open. Again, I'll talk about this shit later. You don't need to know this shit now. All you need to know is flexible and open 24/5, but basically, I make this shit fit around my lifestyle, and you can do the same for you. Boom. 3, you need small capital to start. If you got the question of how much capital do I need to start? How much money do I need to start? Can I start with $100 or £100? You probably could. I'm telling you, you don't need a lot to start. In fact, I started with I bought my first funded account for about £500, and that's a big account size. You don't even know what a funded account is, but basically, you need small capital to start. It's very good. Number 4, it builds discipline, and patience. I've seen this just equate in my lifestyle, bro, and that's what I love about Forex. Like, to be a good trader, you need to be disciplined, you need to have patience, and a bunch of other psychological, terms. You need to be top notch at all of them. And if you're getting better at it, you're gonna see it goes hand to hand with your trading and your lifestyle. And I've seen that happen to me. If you're disciplined, you're gonna, be disciplined in your lifestyle. You're gonna go to the gym, you're gonna do what you wanna do, you're gonna do shit that's good for you, turn down bad shit, sacrifice your time. If you're patient, whatever life throws at you, you're gonna be able to face it with patience, And it also works in your trading. You need to have patience when it comes to waiting for your setups. You need to have discipline when it comes to following your strategy. But the main point is that it's gonna build you this shit. So if you're a bum right now, you kind of need to build yourself to get better at trading. And that's what I fucking love about it. And that's why I put it as an advantage. All right, so that's advantages, right? Let me title it. Messages. Let's underline it. I doubt we can underline this. Ain't fucking word. This is trading view. Oh yeah, and again, bro, if you're a beginner, don't worry about this shit. It's called trading view, yeah? I'm gonna tell you how to use it, why we use it, what it's used for in later video. I'm just using it for text right now. I don't think I told you that at the start, but yeah. All right, so let's get into pairs. Actually, let's put it here. Let's get into pairs. So if I bring this shit down, which I was talking about earlier, this is actually called a pair. What you need to know about pairs is that the first currency of it is called the base. The second currency is called the quote. You can have it like a slash here. Bro, you can have a slash here, or you can have no slash. It's fine. But first currency, base. Second currency, quote. And if I put the exchange rate beneath it, we are always buying or selling the base currency. So in this case, I'm always buying or selling the GBP USD. I mean, the Great British Pound against the US dollar. Cool. Yeah, that basically covers base and quote currencies. All right, let's move on to majors, minors, and exotics. So, majors. So what are major pairs, right? What they are is they always involve the US dollar. They are the most liquid, they have the tightest spreads and the lowest trading costs. So I'm gonna name all the major pairs here. I'm gonna put them on the side so I can't remember. So you have the Euro USD. Oh shit. You have the GBP USD. You have the USD JPY. You have USD Swiss franc. You have Aussie dollar USD. You have New Zealand dollar USD. You have USD Canadian dollar. These are all the majors, right? And what are the characteristics about them? Cool. Most liquid, meaning it has a large amount of money being pumped into this shit. Tight spreads. I'll talk about spread later, but just write this down. And lowest trading costs. I'll talk about this later, but just write it down. You might generically know what this means. Cool. Let's talk about minors. Nah, I'm not talking about kids. So minors, they do not involve the US dollar. They're still liquid, but less liquid than major pairs. Examples include Euro, GBP, Euro, Japan Yen, where is it? Euro, Japanese Yen, GBP, JPY, which I trade a lot. So they don't involve the US dollar. The US dollar is basically a very standard international currency. They replaced it. Yeah, you just need to notice the USD is very standard. Majors include them, minors don't include them. And let's just write another one. The Australian dollar against the New Zealand dollar. Cool. And the characteristics, so do not include the US dollar. They are still liquid, but less than majors. Cool. And now let's look at exotics. So I'll give you some examples. US dollar, Turkish lira, US dollar, South African rand, I think it's ZAR. Basically just bullshit pairs paired with one of the major pairs. So anything from here, whether it be Euro, GBP, Japanese Yen, Swiss franc, Australian dollar, New Zealand dollar, Canadian dollar, and obviously USD, paired with a bullshit pair like, you know, maybe it might be USD paired with fucking, I don't know, Zion Rand, some random ass, I don't know, rupees. I don't know what the ISO code for rupees is, but it's basically a major pair paired with something that isn't within here. And what they are is they are very high spreads. I'll talk about what spreads are later. They have less liquidity and more volatility. Oh my god. Please, why is it not auto correcting, bro? Volatility. Alright, fuck it. I can spell, but I'm just tired. Alright. So cool. We covered majors, we covered minors, we covered what exotics are. Now last, let's just look at what different sessions we have. And I'll do that on a website I like to use called Baby Pips. Cool. Where is it? I should have the sessions, like, and I'll just explain what they mean. Cool. Alright. If this will load. Why is it so slow? The hell? Bro. Alright, this shit is not responding no matter what. Please, let me try one more time. If not, I'll just explain it in... Okay, it finally loaded. Oh, I clicked the wrong button. Alright. So, there are 4 main trading sessions in the Forex market. We will start with London because I am in London. London opens at 8 AM and this is GMT. So adjust it for wherever you are. And it closes at 5 PM. So London is the most active session with high volume, especially, as we'll talk about next, it overlaps with New York, which opens at 1 PM, closes at 10 PM. So you see within that overlap, the volatility, which is shown at the trading volume on the bottom here, is crazy, bro. So I'm catching trades like mainly within this section here. Cool. We also have Asia session, which opens at 1 AM. I mark it at 12, but officially it opens at 1 AM, closes at 10 AM. So there's a little overlap between 8 AM and 10 AM for New York Asia session. And Sydney, no one really cares about Sydney session, but it opens at 10 PM, closes at 7 AM. So yeah, the main, okay, this is for notes. Main 3 sessions, Asia, or aka Tokyo, London, New York. Tokyo session is 1 AM till 10 PM. London session 8 AM till 5 PM. London session 1 PM till 10 PM. And then you can see the overlaps within here. New York session, it's the second biggest, and it overlaps London. Versa versa, London overlaps New York. Within that section, volatility is very, very high. For Asia session, less volatility, and it's pretty slower. And you can see it through the trading volume here at the bottom. But yeah, just mark the times, mark the overlaps for your time. I don't know if you're in London or a different country. But yeah, that's basically part 1 of the basics that you need to know when it comes to trading. In part 2, we will get into more of the basics, but obviously a bit more complicated, like what is spread, because you did have to write spreads, like what it is, what even, we won't talk about liquidity, we'll talk about that later. But yeah, that's it for this video. I'll catch you in the next one.